Hi everyone, after some action today, let's look at the most probable bullish and bearish scenarios, starting with the invalidated bullish scenario where we're looking for 1, 2, 3, 4, 5, where I mentioned this has to be the low of this wave 4 because it already retraced to the maximum target of a wave 4 for then a wave 5 to the upside where an interesting target was the 2022 range highs. Now as price went to the downside today, this scenario becomes very unlikely as now there's hourly candles closed below the 0.5. It also touched my invalidation line, so yeah, this is not really a scenario I'll be looking at anymore, but still to educate you a little bit on how this was potentially traded. Then of course educational and no financial advice, but I am trying to educate you on how you can potentially trade Elliott Waves based with the knowledge and the theory of Elliott Waves. We had the ladders over here, the long ladders in this area. Stop loss was then below the invalidation for this move to the upside for then potentially a wave 5 further up. But if we look at this structure over here, what we are looking for is an impulsive structure to the upside in a wave 5, because a wave 5 needs to be an impulsive structure. So this then has to be some sort of an impulsive structure, right? If we then look at the volume, you can see that the most volume during this move to the upside was over here. Now in an impulsive structure, the most volume usually and by far most commonly is in a wave 3. So we can expect this to be a wave 3. So then we have some sort of a 1, 2, 1, 2, and then eventually a wave 3 to the upside. Then we have a 4 and then a wave 5. So after a bullish move to the upside like this, where you also see the highest amount of volume, you expect a little bit of a retracement. Yes, that's fine. But then eventually you expect continuation, because this is then a wave 4 and then eventually another wave 5 to the upside. So basically what I'm saying is you expect these highs to be taken, but as you can see, price did never retrace above these highs anymore. The highs were not taken. Now with this knowledge, yes, stop loss break even is very important, especially after seeing this move to the upside. The stop loss has to be break even, guys. Defense is the best offense in trading as well, in my opinion. So at least break even, if not a little bit in profit, is important. However, from an Elliott Wave theory knowledge-based perspective, the stop loss could have been a lot higher than break even, because if this is a wave 3 to the upside and you expect a 4 and then eventually a 5, you do not want to see price retrace all the way down here. This is basically the invalidation, because if this is the big push to the upside and then you want to see a 4 and 5, price is not allowed to go below this low before it at least takes the highs. So if the highs would be taken and then price goes down, it's fine to go below this area in this particular scenario than what I'm talking about, right? But the highs were not taken, and therefore price moving below this low is an invalidation of this scenario. That is why the stop loss based on Elliott Wave knowledge and theory could have been over here for then still a little bit of a profit. And this is why it is so important to also study Elliott Waves yourself, and that's why I also try to educate you, not only by showing the scenarios that are bullish and bearish, but also try to show you with the pools that I do and how potentially things can be traded based on your plan eventually. So that being said, this scenario then of course now is very unlikely. So let's look at the, oh wait, and actually one more thing before I continue. The divergences, as mentioned in a previous video as well, you do not have to see bearish divergences at reversal points, but it would be nice to see. And so far we didn't see big bearish divergences between, for example, this high and these highs over here, and then a higher high on the CVD, because if I open the CVD, you can see, yes, we have a lower high, but also lower highs on the CVD. So yeah, no bearish divergences there. And you don't have to see these, but if you do go to the at least 15-minute time frame, or even actually the 5-minute, maybe the 5 is even better, then what you do see, and actually I missed that this morning, is you had this high creating lower highs, and you do see higher highs on the yellow line CVD over here. But this is very low time frame. This is 5-minute stuff, and usually when there is big reversal areas, like for example, if this would really continue to the downside, you want to see bearish divergences usually between some bigger pivots than the very small 5-minute pivots that we have over here. But it was a little bit of a sign for potentially bearish continuation that we had right now. We do still have the potential bullish CVD divergences, which of course can be leading, but as far as they're not invalidated, they're not invalidated between the lows that we have over here and a higher low. So a higher low in price, but as you can see, lower lows on the CVD. So let's go to then the first bearish scenario on the chart right now, switching to the 30-minute time frame, where this is a 1-2-1-2 scenario. So we have a 1-2 and then another 1-2 for then eventually an impulsive structure to the downside in a wave 3, where usually the minimum target for wave 3 is the 1.618 sitting at 21.170, which also is in confluence with the target box that I have over here, which ranges from 28.2k to 27.8k. So that is definitely an interesting area for at least a little bit of support or a bounce in this particular scenario. I do have to say that if we look at this wave 2, in this then being potentially a wave 1 and a wave 2, the 0.886 is a rare target for a wave 2, more commonly for a wave B or X, which I'll show you in a second actually, the WXY that I have over here. But the 0.886 for a wave 2 is a rare target. And yeah, it did move to the downside. It can be a wave 2. I just want to say it is a rare target, which is something we have to keep in the back of our minds as well, in case this might eventually result in something else than a very bearish impulsive move to the downside. Because if this is wave 3 of a wave 3, meaning if this is in yellow a wave 3 of a blue wave 3, you really want to see volume pick up. And as you can see right now, we had this massive volume spike at the beginning of this move over here. That is generally what you like to see in an impulsive structure, which then is a 1-2-1-2 before then a bigger 3 to the downside, where eventually targets can go much deeper than the ones over here around 28k, because this would only be then the yellow 3. But as you can see, there's more targets for a yellow 3. All these targets shown on the chart can be targets for a yellow 3 or even deeper, because wave 3 tends to be the extended wave, and it's very difficult to know how deep in this scenario or how long a wave 3 can actually be. So it's a matter of time, and we have to wait and see what's going to happen on the chart. If price is going to move to the downside, how far is it going to go? And then eventually after the yellow wave 5 is in, which means the blue wave 3 is in, we then have still a wave 4 and a wave 5 in blue to come as well. And if we then look at the more bullish scenario, more bullish, say basically meaning it's not an impulsive structure to the downside for much deeper prices, but we're looking at this to be then some sort of a WXY. So we have the highs over here, then a 3-wave ABC in a W, then a 3-wave zigzag in wave X as shown this morning as well, because this scenario I already had on the chart this morning. And then we're looking for a 3-wave in Y. Now as it stands now, if this is a 3-wave structure, then it has to be some sort of an ABC, but this wave C, this then big leg to the downside, is way too long, way too extended for this to be a wave C compared to this short A. It goes past all the targets for a wave C as well. So that is not really something I'm looking for. It's more likely then that this is some sort of a 1-2, then we have a 3-4-5. Then you want to see a 3-wave correction to the upside, not taking the highs over here, as that is then the invalidation. And then eventually another move to the downside, where then this becomes a wave A, this is a wave B, and then eventually wave C to the downside. If price continues to the downside and we're actually going to reach these targets before at least seeing some sort of a reversal up, then it is more likely the bearish scenario is activated, because this is the target area for a wave Y, and then this being a W, X, and then a wave Y. And if with the first move to the downside this target box is already reached, usually not something I really like to see. I would like to see a reversal back up before this target box for a wave Y is reached. And also this is the most common target area for a wave Y, in this then being a WXY. And as you can see, also a little bit of confluence with the target box as well, with the 1.236, after which, and that is why this is the more bullish scenario, also because of this move to the upside. But then after a WXY, you expect another at least 3-wave move to the upside instead of a continuation to the downside. So, well, I'd like to thank you for watching. Check out the macro and high time frame video if you're interested. You can click it right here. For now, I hope this video was helpful or valuable to you. So I'd like to thank you for watching again and subscribing as well if you're interested in this content, and I will see you at the next one. Bye bye.